In this video, we are going to discuss various on-chain metrics of Bitcoin. So we've got a lot of charts over here discussing the usage of Bitcoin, the number of addresses, the mining revenue, Lightning Network statistics. We've all kinds of interesting charts here. And in the end, looking at those charts, we can then find out, is Bitcoin simply just cheap right now, or is adoption actually going down? Is Bitcoin actually in a long-term decline? Now let's start off with the transactions on the Bitcoin network each single day. So this is a 7-day moving average and it starts in 2017. Now 2017, this is when we had a real bull run in Bitcoin, right? Bitcoin went from $600 all the way to $20,000 in a single year. And then in 2018, we got our crypto winter where we went down by more than 80%. This is the background of this chart. This is then the price collapsed and the number of transactions also collapsed quite a bit. Now, starting from the middle of 2018, this then recovered, and it recovered while the price also went up. So we can see there is some kind of a correlation here, right? The more active the Bitcoin network is, the higher the price also tends to be. Now, those are the transactions directly on the Bitcoin network. It's not related to the payment-related Lightning Network. So these transactions can pretty much be seen as investment-related transactions, people that buy and sell for the long term. Now, this is interesting, right? We are not at historical lows. We have been lower in July of last year in terms of activity. We are also not particularly high, right? Bitcoin then pretty much flattened out beginning of 2021. So when we look at this, right, the beginning of 2021 was then the time where still we had a bit of a rise, but we pretty much then went sideways. So that was the peak in number of transactions as well. The Bitcoin network isn't dying for sure. We are not at elevated hype levels, but we are also not in a constant decline. That's what we can see here from the number of transactions. And also look at this in a slightly different format. So this is now the same chart. Instead of a moving average, we have this now monthly as a bar chart, pretty much the same thing. Now, next, let's look at the number of active addresses. It's interesting how constant this actually is, right? The range isn't too large. We also don't see a constant growth over here. So even though the number of active addresses now is maybe just 20% or so higher than it used to be at the beginning of 2017, even though that adoption hasn't grown that much, the price during that time, right, from 2017 to today grew much more, right? It went up by 2,600%. So what we can see here is that it's not necessarily just attention that drives the long-term price of Bitcoin. What really drives the price is the long-term outlook, as in the people that buy in. Do they believe in a long-term positive case of Bitcoin? And this seems to be the case, right? So we have pretty much a constant inflow, so to speak, or a constant activity of people interacting with the blockchain. It's not hyperbolically increasing. The value, the dollars per Bitcoin, is increasing massively. That's simply because people that get involved in aggregate, they tend to buy and hold. So they get in, but they don't get out. And so we don't need necessarily a lot of additional growth. We simply just need constant growth, constant inflow of new people. This already helps the price increase quite massively. Now here again, just a different representation, right? As in each month beginning in January 2017, what was the number of active addresses? More or less constant at around the 20 million mark. Sometimes when there's hype, this goes up to maybe 34 million or so. Sometimes when there's a crash, this goes down maybe to 18 million. But look at these differences, right? This is only a 2x difference in number of active addresses. But the price itself, it didn't just go down by 50%, right? It went down by way more. So there is a leverage effect here in both directions. This is in the end what also creates those opportunities, right? Otherwise we wouldn't have these kinds of declines that then help us to buy the dip and ride the volatility, ride those waves. Currently, again, we do see a decline pretty much from the 34, 35 million active addresses to currently maybe 28 million or so. The July bar here hasn't yet been completed, so don't overinterpret the last data point over here. We are not at historical lows, so that's why moving average is probably a better representation here. Here we've got the number of new addresses. It's not that different to the number of active addresses, right? The active addresses are a bit more smoothened out. The new addresses, they seem to be coming more in bursts. So here we can really see the spikes. So within 7 days, 600,000 new Bitcoin wallets had been created. The same again happened in January of 2021. So one might argue that really January of 2021 was more or less the peak, even though we then still saw a rise here of 60% or so. The price did continue to go up, but this was not necessarily retail driven. This was not driven by the masses. That kind of a volatility seems to have been driven by the institutional investors. We cannot see a similar kind of price increase to all-time highs in November of last year when we look at the on-chain metrics. November of 2021 was actually relatively low in terms of new addresses. And now when we look at other charts, I don't have this now ready in this video, but you can see this in other videos on this channel. We can see again that small retail tends to buy and the larger institutional wallets tend to sell. That's why we see the price decline again. So what pushed up the price over here from like 40K to 69K is now what's pushing down the price again to a similar magnitude. Let's look at this in monthly. Again, sometimes we have these spikes. That's when we should stay rather cautious and offload our Bitcoin if we want to do rebalancing, for example, to the stock portfolio. What about Bitcoin's adjusted on-chain volume? What is this meaning? This looks at the number of transactions times the price of Bitcoin. So this shows how much value is actually being transferred in terms of US dollars. And since the price of Bitcoin is going up, of course, this metric is also going up relatively steeply. By this metric, we are higher even than the end of 2017 peak. Again, we have this, of course, in a monthly chart. Not necessarily something too useful, but still included here for completeness sake. Now, this is the Bitcoin miner revenue. So miners get revenue due to two mechanisms. First is the subsidy. So this is what people talk about when they talk about the Bitcoin halvening and the additional supply hitting the Bitcoin market, the inflation, right? New Bitcoin hits the market every single day. And currently the inflation rate is 1.66%. We can see every 4 years this gets cut in half. So the new supply is lower and lower. In 2 years, the Bitcoin inflation will be cut in half, so it will be roughly 0.8%. This is what mainly goes to the miners, but it's not everything. Because sometimes there might be so much activity on the Bitcoin network that the limits of the blockchain get hit. And that's why there is the Lightning Network, right? There's some kind of scalability issue with Bitcoin. You have to submit your transaction with higher gas fees. And that also goes to the miners. And that's then what we can see here with transaction fees. So that's here in pink. So in purple, we see the subsidy. In pink, we see the additional transaction fee. The more active the network is, the higher this is. So over time, the subsidy will be lower and lower. Now, the revenue here is shown in dollars, and that's why it's not going down. Even though the number of Bitcoin is going down all the time, the revenue itself is not necessarily, because the Bitcoin price increases. This is a good metric of how large the mining industry actually is. That's what the miners can generate in revenue. So in total, as an industry, the mining revenue hasn't really grown since the peak of 2018. I think that's pretty interesting. There is quite a bit of volatility. This is probably one of the main issues to solve, to hedge against the volatility, to stay in the market as a miner. Now, this is the same as a monthly chart, and this is the breakdown of transaction fees of the total miner revenue, right? So when the activity is high, people have to pay more per transaction, then the percentage of the transaction fee of the total miner revenue is pretty high. The rest here is subsidy. So this is pretty much kind of like the cherry on top. If you are a miner, you better just work with the assumption of the subsidy. Only during hype times do you get this additional transaction fee revenue that then can go up to 20%, but usually it's rather a not so important amount overall. Here's Bitcoin's hash rate, and that is increasing with time. Why is that? Because of technological advancements mainly. So mining hardware gets more efficient. The electricity sourcing also gets more efficient. So people are using waste energy energy that's not being used for anything else to mine Bitcoin. They're using GPUs that can hash more per energy unit consumed. And so this tends to go up. It's likely that this trend will continue in infinity. Technology will continue to evolve and people will find ways to find cheaper energy sources. This is the Bitcoin miner revenue per terahash. This, I think, is not really that useful of a chart, except when you keep your hardware and your energy sourcing at constant over time, then you will see how over time you get pushed out of the market. So you have to constantly innovate as a miner, upgrade your hardware and find cheaper energy sources. This is the average transaction fee on the Bitcoin network. So again, we can see when there is a lot of attention, this tends to spike. So this was very high in March of last year, around this price level over here, 60K, very close to the all-time high. We did get a second peak, but as said, this seemed to be mainly an institutional price increase, not so much retail driven. So we don't see a second peak here in the transaction fee. But again, right, when we have very high activity, we also tend to have a very high price. So this tends to be a pretty good indication of when it makes sense to offload Bitcoin. Currently, of course, that's not the case. So when we are low here, it's rather time to dollar cost average into Bitcoin. This is the percentage of Bitcoin supply in profit. So we can look at when did a Bitcoin move the last time, right? We look on chain at the transactions. We look at the last transaction per wallet, per Bitcoin. Check at what price did this happen and then compare that price to today's price. And then we just look at how much of the Bitcoin supply is currently winning versus losing. And we can see even during a bear market, right? January of 2019. So over here, pretty much the exact bottom. Still 40% of participants had been in profits. So there are quite a few long-term holders in Bitcoin. 40% had not been in the losses even after a more than 80% drop. So in other words, 40% bought before July of 2017 and actually made money investing in Bitcoin. So another lesson, that having a longer time horizon tends to pay off. If you have a short time horizon, you're part of the 60% over here. If you have a longer time horizon, part of the 40% that are in profits. Currently, we aren't that depressed here. That makes sense. People tend over time to also have a longer time horizon because they simply look at these charts, understand that Bitcoin has volatility, and only because it goes down by 70% does not mean that it cannot recover. Because it has recovered several times in the past, it is relatively reasonable to assume that it will recover again. And so we see less selling during depressed prices. People are more aware what's going on long term. Here's the Bitcoin addresses with a balance over a certain US dollar amount. And we can see quite a few addresses have more than 10K in them, which makes sense, right? It's not 10 times the number of wallets that have over 1K. So more money is within the 10K range. I think the same we can also say for the 100K range. I don't have the exact numbers over here, but it's very likely that Bitcoin is still relatively top heavy skewed. So people that are rich own most of Bitcoin, or people that at least became rich. This changed somewhat with this recent dip. So when we look at other charts, we can see that the small wallets are the ones that are picking up the slack, that are mainly buying this dip. Bitcoin becomes more and more widespread and into the hands of the regular people. This is the percentage of Bitcoin supply that's being active. We can see the very short-term speculation, the 7-day speculation, is relatively constant. You can see the swing traders of 90 days, they tend to be elevated during hype times. And we can see that things pretty much go in waves. There are better representations of that data with the Bitcoin hodl waves. For that, I will link another video right after this one. Feel free to check that out as well. We've got 2 more charts. If you so far enjoy this video, don't forget to give this a like. Thank you. So this is the Lightning Network capacity. I think this is very interesting. We can see how adoption over time constantly increases even during a crash. So of course, in terms of US dollars, this is going down together with the Bitcoin price, but just in raw Bitcoin capacity, in technical capacity, this continues to go up. So Bitcoin tends to see increased adoption as a payment mechanism on the Lightning Network. This solution tends to grow, and it grows quite quickly, right? It was at 1.2 Bitcoin in July of 2019 and more than 3x'd since then. Last but not least, we've got the Bitcoin daily real-time hash rate by pool. So what's nice here is we see the US getting more and more share of the overall mining. This probably also helps with global regulation if Bitcoin becomes a stronger part of this. And we still see a relatively healthy segregation across different pools. Still some kind of a decentralized manner how Bitcoin is mined. There's not just a single player that's dominating it all. Don't forget to subscribe in case you haven't yet. And there's also a Telegram channel. Simply search for Bitcoin Strategy channel within the Telegram app. Feel free to check out this on-chain video. It shows how Bitcoin moves from institutions to retail. The current buying seems to be pretty healthy. Hope to see you in that video, and thanks for watching this one. Bye-bye.